Sorry, I forgot that. So, uh, good morning, everybody. Welcome to the Morning Volatility Report. It is Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to our Morning Vol Report, which apparently we have. So a couple of things happening, just headlines, right? We were down a little lower. Headline news. North Korea has always had an atomic bomb, but now I guess they have a hydrogen bomb and they blew it up. And I guess they're rattling stuff with the Chinese. Oil is making new lows. That's making everybody freak out. And the basically, right. So anyway, stronger economy. I think it's helping a little bit. Whoopsie here.
Muted. Unmuted.
Sorry, I went down. But this is good. We need economic growth. It's got to be an engine somewhere. And now that the Fed is doing what they're doing with rates, hopefully good news is good news. We bounced about half a handle, about 0.5% on it. So that part of the news is good. I mean, as far as the rest of the vol story goes, volatility is trading at around, VIX is back up a little bit today. What can you say? We're gapping 1.5% on just about anything, right? The Chinese, Koreans blow up a bomb. Oil is still, we are very much tied to oil, so the weaker oil is, the worse things tend to be. The major oil companies seem to be shaking it off a little bit. I think we'll look for some things today in the chat there. Because at some point, lower oil prices have to affect these companies a little more. They're all kind of hovering around those low areas, and it would not surprise me to see them start to go as well. We keep looking for bottoms in oil, and if Iran and Saudi Arabia can keep arguing about something and oil prices still stay relatively low, just one is going to pump a lot, and I guess that's the end of the story for the price of oil. The U.S. is exporting, so we'll see what's happening there. As far as vol goes, I mostly be looking, short term for the week, looking at the vol products for this week. As you're basically aiming for some sort of landing. I don't know any of the other longer term vol products, like the long products like SVXY, XIV, we are in backwardation, and none of that is really great for the value of all these products. As long as you have a curve, this is a live curve that looks like this, VXX, the decay is going to be positive. XIV, the decay is negative. SVXY, all these products, right, they just don't like this, right? And the curve is what I would just call in a heightened state. Okay, we're backward almost all the way down the line, right? Not quite yet, but getting there. So we kind of get in and out of this. We haven't been able to sort of shake this one way or another. So as funny as it seems, as high as volatility is right now, let's say just VIX where the level is, it's having a hard time really getting really low. And I think that's kind of the thing. So, sticking to shorter term trades once you have a move in vol, maybe getting long vol again once it drops, seems to be really the only vol trade that's working. Short term, as far as the market goes, I think now you can start looking at some index put butterflies, just standard put butterflies. The reality is we keep getting lower, right? Every time we have a move, it seems to be, we're just making these kind of little bounce, lower, little bounce. It's just not, we're kind of in, it's just not happening, right? Whatever rally, all those QE rallies we had, again, they're not around. And while we can bounce from sell-offs, which is certainly possible, rallying up to any kind of decent level feels hard. And I think part of the reason too is without any, like Google, Microsoft, and all those stocks are having trouble. Apple now, by declaring their news at least, or their suppliers are saying, hey, there's less orders. We don't know exactly how big that is yet, though. But Apple is down from 130 to 101 this year from a high. So they've taken whatever growth in the product out. So again, we can start looking at those types of trades. Again, we've already looked at a little bit in our an option pit on that. But as far as Apple goes, any launch in this thing, I don't know what makes it go higher, maybe $1 or $2 or something if Carl Icahn, demands more dividends. But what we have is a market that has a hard time rallying. We're now back to lows we haven't seen since October. Whatever relief about the Fed is now total, it seems like it's priced out. So you've got basically a market that is sort of trendless, although it looks like the fundamental economy stuff is getting better. Lower oil prices. Now you have Korea. Now you have China. So those are three things, right? Market doesn't like all this uncertainty, and you're going to keep seeing volatility. So I think you stick to trades where you get a move in volatility, and you can trade the vol products, sort of on a weekly basis. But I think any long-term trend is going to be very difficult. Right now, the trend for volatility in general has been up, although it trades higher and pulls back. But at least for right now, the trend is still up. So you have to be careful. You just can't go sell it because the market's still backward, and it's difficult, right? It's like picking a top somewhere. It's very hard to do. It's like very, very difficult. All right. So with that, but we are seeing higher volatility. At some point, things like an iron condor are going to start to look okay. We can now start to spread them out pretty wide, and especially with the lack of rally we've been having, it makes those trades start to look a little bit better. And with that, I will see all of you in our chat today. Bye-bye.